Welcome back to Intelligent Investment Today, the podcast concerned with all things value investment. In each episode, we take a look at a different subject from the world of investment and attempt to apply the lessons as laid down by the man widely considered to be the father of the craft, tutor and mentor to Warren Buffett no less. We're of course talking about Benjamin Graham. In this episode, we should be taking a look at one of the world's most popular and shiny stores of wealth. We'll be talking all about gold. Since time immemorial, gold has been the commodity of last resort, the thing everyone seeks out in times of trouble. So we should be talking about the unique features of investment in this particular commodity, weighing up its pros and its cons, and hopefully arriving at a conclusion as to whether it should make up any part of a value investor's wider portfolio. So let's dive right on in. As always, sit back, strap in, and get ready to take on board another lesson in value investment as inspired by Benjamin Graham. So let's cut to the chase. I'm not a big fan of gold as a fashion accessory. For one thing, worn as a personal adornment, it's straight away going to be targeted by any mugger worth his salt. It's also, in my personal opinion, the most gaudy of all the expensive metals. I find it ugly, off-putting and lacking in class. I much prefer my watch straps plastic, thank you very much. And if I'm ever going to get mugged, it's not going to be for my watch. But each his own. If dictator cosplay is your thing, then it's your thing. Of far more importance, of course, from the standpoint of investment, the reason we're all here today is to consider the part gold can play in any well-diversified portfolio. When you actually think about it, really think about it, what we actually do with gold is quite mad. If you had to explain to some extraterrestrial who had just landed on this planet about humans' obsession with gold, I'm certain they would think us crazy. We spend huge amounts of resources to find the stuff, spend massive amounts of money to extract it, endangering the lives of adults and children in the process. Then when we finally do get this stuff out the ground, we then straight away put the vast majority of it back underground again in subterranean vaults, where it will likely never again see the light of day. And it doesn't stop there, because then we spend huge sums of money to make sure nobody comes into these underground lairs and steals the stuff, whilst all the time achieving nothing in a purely practical sense. Perhaps with that last statement I'm not being wholly fair, because clearly it does have an important role in global economic stability, but its role is a purely psychological one. But let's put to one side its very real role from a purely economic standpoint, because what we're chiefly concerned about here today is its merits as an investment from the standpoint of an individual investor. And I'll say up front again, I'm not a big fan. I certainly don't dismiss its role as a hedge against global economic calamity, nor as a form of diversification. But I'm no more interested in owning the stuff as an investment as I am wearing it on the high street. And here is the very simple reason why. There's no price I can pay for gold where I'd feel happy or comfortable that I'm getting a bargain. And as a value investor, this is a very uncomfortable territory to be in. The value of gold is what Mr. Market says it is. I have no ability to refer to the accounts to see if he's wrong and take him up on his offer if he is. There is literally no price that is so low I can say that it's selling at bargain levels and should be purchased on that basis. And even if I did buy it, I would have absolutely no idea when it hit a price so high that it should be sold. If as value investors we preach day in and day out that investment should only be made on concrete data and facts, then there is absolutely no basis upon which gold can be purchased as an investment. This is not something that is in our particular skill set. It is also, in my view, capital that can be put to better use elsewhere. As well as the impossibility of judging on factual grounds whether gold is so cheap it should be bought, or so dear that it should be sold, I also think tying up capital in shiny, useless stuff does a disservice to capitalism more generally. Now, capitalists don't exactly have a great reputation in general, and as investors in the stock market, we all are de facto capitalists. But their and our contribution to a functioning society is often overlooked. Without efficient allocation of capital, our societies, as we know them, would come to a sudden and jarring halt. Without placing capital where it is required, and where it can be most efficiently put to best use, populations as a whole will suffer. Storing capital in gold, which does virtually nothing from a practical point of view, cannot be putting it to its best use. It is the equivalent of hiding cash under the mattress, or dare I say it, investing in cryptocurrency. And it has to be said, as much as I also hate crypto, Crypto in many ways is more useful than gold. It doesn't cost much to store, and it's much more liquid. You can actually go out and spend the stuff relatively easily. But don't get me wrong, I still do think to get involved with crypto, you need to be so dense as to have your own event horizon. So to summarise, I can say that I don't invest in gold for two main reasons. Number one, I have absolutely no way of ascertaining what it is worth. This is because what it is worth is not tied to its usefulness as a commodity, but the value placed upon it by investors, which is always going to be arbitrarily arrived at. But even if I could somehow draw on the accounts to arrive at a fair intrinsic value, I would still have issues in placing capital in something that does nothing actively to promote economic prosperity. For the most part, gold has little function other than looking nice and shiny under the fluorescent tubes that eliminate it in the bunker in which it resides. But wait, there's just one more thing that we haven't yet talked about. What about the gold industry more generally? Those that mine the gold, the ones that refine the gold, the ones that sell the gold. Well, all these things have one very important thing that gold, the commodity, doesn't have as a destination for investment. They have available historic accounts. And where historic economic data exists, we have the scope to determine intrinsic value. So perhaps a much more suitable hedge for value investors may lie not in the purchase of the commodity itself, but in the businesses that serve it. Regardless of what price gold is selling at, through dedicated study of the accounts, the value investor should be able to tell if one of these businesses is selling below its intrinsic value. It is in actual fact a business not wholly dissimilar to any other. The product just happens to be gold. I do realise I've been a little unkind to gold in today's edition of Intelligent Investment Today. And that's partly, like I say, down to the fact I really don't like the stuff. But I can see from the viewpoint of other investment styles why it can be such an attractive place to park your capital. If you're a speculator rather than an investor, someone who's going to be buying and selling on the basis that they think they know how things are going to turn out, then the attractions of gold as a hedge against being wrong is more obvious. If you're betting on some collective of businesses doing better in the future than they've done in the past, then the big risk is a general economic crash. By buying gold, they can mitigate against some of the risk of such poor outcomes. Because in the event of economic turmoil, some of their losses will be paid by the inevitable rise in the gold price. Needless to say, value investors do not operate on the same basis. We prefer to hedge our bets through the time-served notion of the margin of safety principle. We therefore have no requirement for gold as a hedge against losses. On that, I shall draw today's edition to a close. I do hope you've enjoyed my ramblings on the features of gold as a destination for capital, and I do hope all you gold bugs out there can see it in your heart to forgive me. If you have enjoyed it, you know what you can do. Please add to playlist so that you'll be alerted the moment any new additions land on your platform. I'm David Coombs. This has been Intelligent Investment Today. Until next time, stay safe and happy investing.